Craig Johnson. He's Piper Sandler's chief market technician. Welcome to you.
Thank you for having me back. Appreciate it.
Three good stories here. Let's start with General Motors. A lot of news today on the share buybacks. Shares are up 10%. What do you see?
I think this is a stock that's going to take some more time. When you look at the shares of General Motors, all you're doing is having a pretty good relief rally back up to the 50 and 200-day moving averages. And that's all it is just a relief rally. More time required from my perspective on this stock.
More time. So you're not okay. All right. Now we see there those lines that you're following are the moving averages.
Yeah. So we're following the moving averages right here. We at the sort of resistance level right here. And then we've got another support level right here. All we've seen, Kelly, is a move back up into this sort of area here. I would not expect that this stock would do anything more than perhaps fail here and roll back over. There's certainly challenges to be had. The share buyback is clearly helping. But from my perspective, there's better stocks to buy than this at this point in time.
In autos?
Not necessarily in autos.
Right.
But Tesla, I would say, looks more constructive. But I would say some of the retailers that you were just discussing, like Abercrombie and Fitch, great looking charts.
Really?
Still continue to look quite constructive.
All right, so let's go elsewhere in the news. We got some stuff on Cigna and Humana maybe getting together to try to compete with the 800-pound gorilla, which is United Health, when it comes to just about everything health insurance. So is UNH, Dow component, heavy influence on the market, a stock that you would buy or sell now?
At this point in time, I'm going to put that as a hold also. The reason I am is because when I look at this chart, you're just sitting here consolidating. I would be a buyer if we could finally break out above that sort of resistance level at $550. Dom, I'd be a buyer at that point in time. But as a technician, I want to see the confirmation. I want to see the breakout. I want to see a pickup in volume as we go and do that.
So an entry stop at 550, you said.
Correct.
Okay.
So I'm going to be waiting for that.
That's a couple of years we're going back, really, that it's been moving sideways. So they've been hitting the ceiling multiple times.
They have. And what's interesting is they're doing a lot better than a lot of the other healthcare stocks. We got our healthcare conference happening right now in New York, and there's just a lot of those companies. They're still trending lower. And at this point in time, this is a pretty good relative outperformer.
It's true.
But not breaking out quite yet.
Yeah, no, that sector was supposed to be kind of the place to hide this year. Now they just want to hide, I think, if they've been in it. All right, let's talk Okta. Had a massive hack, some customer data exposed. What's the damage or what's the opportunity?
Well, at this point in time, looking at the chart of Okta, we've got our support levels and we've got our resistance levels. And it looks like another relief rally just sort of coming into play for Okta. This is one of these names where we're back up to the moving averages right here. And we need to get back through this. I like the fact we've had the higher low get made, but again, not trending as strongly, not putting up as good a relative performance as I would like as other parts of the market at this point in time. So as I continue to watch Okta, it's going to be one of these names that needs more time to ultimately sort of break through these levels and take out some of these prior high levels in here.
All right, so we've gotten through the three names in the news.
Correct.
Let's go because I know Kelly likes going big picture.
I do, but it's almost like now that we're here and we have this, 2.5 minutes, I want to ask about NVIDIA. He mentioned
Sure,
Tesla.
no doubt.
There's Mag 7.
Sure.
I mean, you think they're all going to run or?
So I think the market is entering a period of time. By the way, let me step back and say, we have a 48.25 year-end price objective. We think that we're going to get there.
So that's like another 5% from here.
Another 5% to go. We're watching 10-year bond yields just starting to break down. We broke through an important resistance level at 433 today. We're now trading down to perhaps a 200-day moving average in a couple weeks.
Which is?
That's going to be right around 397.
Oh, wow. You think we could do that in the next couple of weeks, go below 4?
Absolutely.
Wow.
Non-consensus call by all means. We can see that work its way down
Well,
there.
after the action the last couple of days, people are starting to rethink that.
Correct. And there's a lot of individuals that are sort of mispositioned. As equities are working, rates are coming down, stocks are working and working well. Kelly, what's going to really work well, I think, is going to be financials.
Wow.
And I think as you look forward into 2024, we're going to be bringing out our 2024 outlook next week. So hopefully I can come back and bring some of those pieces out.
If you're picking financials, we're going to want to hear that for sure.
But financials, that's not enough to power the market. If you look at the broader S&P 500, financials are not very heavily weighted at all. So with the outlook for the S&P, chart-wise, longer term, can this extend into the first half of 2024?
Equities can definitely work into the first half of 2024, but the Magnificent Sevens companies, they may need to take a little bit of a break, maybe enter some sort of high-level trading range and just consolidate sideways. And in that sort of scenario, Dom, we can start to see the financials start to pick up in performance. Financials are important to the market. They have to at least participate for equity markets to work. And I think you're going to start to see the yield curve starting to shift, and you're going to start to see, with the rates coming down, a lot of those mid-cap banks, which make up a lot of the Russell 2000
index. That's what I was going to ask. The
balance
Russell
sheets are healthier.
You think the Russell 2000 can finally start to,
Correct.
Step into the game?
I definitely think that the Russell 2000 can step into the game, and I definitely think that the mid-small caps are going to have a great year next year. It's been challenging this year. I know this is not consensus.
No, I hope you're right. This all sounds great. It sounds like,
Everybody's been focused on the Mag 7, but this market is broadening out. We got buy signals last week with our breath work and new high indicators. This market's ready to go.
Craig, thank you very much, man.